Achieving financial independence often feels like a far-off dream, but what if I told you that building a $100,000 investment portfolio is more achievable than you think, especially with a platform like M1 Finance? That first $100,000 is the hardest to reach, but it's also the point where compounding interest really starts to kick into high gear. And M1 Finance, with its automation and customizable pies, is the perfect tool for the job. So, how do we structure a strategy to build a $100,000 portfolio on M1? It all boils down to three core principles: smart diversification, consistent automation, and a long-term mindset. Let's break down the strategy. First, smart diversification. You don't want all your eggs in one basket. For a goal like a $100,000 general investment portfolio, I suggest an allocation heavily tilted towards growth, but with a bedrock of stability. A classic three-slice pie works great here. Slice 1, U.S. total stock market, e.g., VTI or SCHB, 60%. This is your growth engine, capturing the overall performance of the U.S. market. Slice 2, international stock market, e.g., VXUS or IXUS, 30%. You need global exposure to reduce single market risk and capture growth outside the U.S. Slice 3, bonds, e.g., BND or AGG, 10%. This is your stabilizer, adding a layer of safety for when the stock market gets volatile. This 90-10 split is aggressive enough for a long-term goal, but diversified enough to weather minor downturns. Next up, consistent automation. This is where M1 truly shines. Set up an automatic weekly or bi-weekly deposit, no matter the size. Even if it's just $50 a week, consistency is key. M1's automation will ensure that every new dollar automatically buys the slices that are underweight, keeping your portfolio perfectly balanced to your target allocations. This is the secret sauce. It forces you to consistently buy low without even thinking about it. Finally, the long-term mindset. Building to $100,000 isn't a race, it's a marathon. You'll see dips, you'll see market corrections, but your job is to stay the course. Do not panic sell. Trust the strategy, trust the automation, and let compounding do its magic. When you hit that $100,000 mark, your money will truly start working for you. With that said, thanks for watching, and until next time.